Hi, Jonathan from Bay Financial Partners, looking at the investment markets. Really could be quite a big week this week. You've got the FOMC meeting in the US. Still expected to see a further easing of that tapering as they look to remove that stimulus from the marketplace. And now debate is now turning to when the US is going to start raising interest rates. At first it was thought to be sort of latter part of 2015, but now a little bit more debates coming through, and really the US economy is growing at a pretty reasonable rate, and there is a growing sort of feeling now that interest rates may just be raised a little bit sooner than anticipated. This has seen quite a few economists and analysts now starting to do the numbers and just see sort of what has happened historically when interest rates have increased. And historically, if you look back, a couple of the major US investment banks have sort of crunched the numbers. And what tends to happen is that you see a little bit of a period of sort of flatness, and then on average it's been around a 10 to 12% increase in the US stock market. So it's not all bad news out there if interest rates do start to rise in the US. That contrasts here in New Zealand after the Reserve Bank met last week, and really quite a change in their tone now with sort of benign inflation numbers coming through. Even the housing market isn't getting too concerned. Obviously dairy prices are under a little bit of pressure there. The New Zealand dollar's come down as well. And now the feeling is that the interest rate increasing cycle that we're sort of currently about halfway through may not be as sort of high as first anticipated. We probably shaved about half a percentage point off that increase, and now probably only looking for about another 1 to 1.25% on rates over the next sort of 18 to 24 months. Indeed, most analysts are now pushing back the next increase from sort of early part of 2015 to maybe sort of May or June of 2015. And as I say, now it probably looks to peak at around sort of 4.5 to 475, whereas certainly in the June meeting, people were still looking for around a sort of 525, 550 increase. On the election, certainly the power companies are a reasonable sort of gauge on how things are going. At the moment they're holding a reasonable bid, not coming under too much selling pressure. Obviously Labour and Greens have this policy to curb some of the profits out there, and that has seen some of the selling pressure coming through in previous weeks. But at the moment, as we run up to the election this weekend, they're holding a reasonable bid. That's probably a reasonable gauge on how investors sort of see the election going forward. So with potentially the rate increasing cycle now not being as high as first anticipated, it is a good time to get that fixed interest portfolio reviewed. You can call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. Lots of interesting articles. I'm looking forward to speaking to you soon.